Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Tuesday, September 1st, 2009. Today's trading was dominated by a sharp increase in risk aversion, especially in New York trading, as U.S. stocks sank despite better fundamental data. Key European indexes were down close to 2%, and U.S. stocks are off more than 2%. The weak performance in equities helped to strengthen the U.S. dollar. The euro-dollar pair, after testing the upper part of its trading range in the early part of the global session, began sliding overnight, broke below an upward sloping line of support, and didn't come to rest until it reached the 1.4175 area. That was a change of 190 pips from high to low. Overnight, data from the Eurozone was rather positive. The number of people out of work in Germany fell unexpectedly by a seasonally adjusted 1,000 people in August, which left a seasonally adjusted unemployment rate at 8.3%. German retail sales, meanwhile, rose 0.7% on the month in July, matching forecasts after declining 1.3% and 1% in June and May, respectively. The pound-dollar pair met resistance overnight from a newly formed, slightly upward sloping trend line. After setting a high near 1.63, the pair stumbled from weak UK data, and then following a test of support near 1.62, the pair fell to 1.6110. That took the pair out of a channel-looking formation as the bottom of that channel was penetrated. The increase in risk aversion led to a pretty big swing in yen pairs. The pound-yen, which had similar price action to the euro-yen, hit a high overnight near 152.76. That was above the open for this week, but lower than last week's swing high. The pair then slid back down in European trading and by 4 p.m. had retested an inch below yesterday's low near the 150 level. In the UK, net consumer lending fell in July for the first time since records began in April of 1993. That means that consumers paid back their debt. Households paid back £217 million in credit and £418 million in mortgage debt. Despite the decline in net lending, mortgage approvals did rise for a sixth straight month in July to a 4-month high of 50,123. The lending figures compound worries about how the troubles in the financial sector are impacting the UK economy. The UK manufacturing sector, meanwhile, took a step back in August, contracting slightly as the index fell below the 50 level, separating growth from contraction. Firms continued to shed jobs as new orders slowed. The decline in the index surprised forecasts and shows that the UK recovery will be uneven. In the US, the ISM Manufacturing Index rose to 52.9 in August, the first time it has been above the key 50 level in a year and a half. A second report showed that pending home sales rose 3.2% in July, the sixth straight month of gains. The two reports show that the efforts by the Federal Reserve to thaw credit markets and the steps taken by the Obama administration to spur demand, both through tax credits for car purchases and first-time home buyers, are beginning to work. Despite the better U.S. news, markets were determined to have a down day. We have already seen how risk aversion boosted the greenback against the euro and pound, and now we look at some other currencies. Here, the Aussie-US dollar pair slid to a new low for this week following a 200 pip decline to the 0.8250 level. Today's high, around 0.8450, was another failed test of the high for this year. Today's drop cut through an upward sloping line of support, and now we find horizontal support at last week's low. The Aussie yen fell to its low from 2 weeks ago. It too broke an upward sloping line of support and fell to trade at its horizontal support. Though we may still be in a period of consolidation and sideways trading if we have a strong bounce up off today's low, a break of support would mean a bigger retracement of the rally we saw in this pair in July. The US dollar-Canadian dollar pair remained within its recent range, climbing higher in favor of the greenback. The pair did not test its high from yesterday, stalling at the 1.1060 area. Oil prices took another tumble, sliding almost $2 to $68.20 a barrel. The fundamental docket remains busy in tomorrow's session. First, tonight we have Australia posting its second quarter GDP numbers, which will be followed by GDP and producer price data from the Eurozone, and then construction and house price data from the UK. Tomorrow, the US will reveal its ADP employment change, factory orders, and its Fed meeting minutes. And that will wrap up today's coverage of the FX markets. Thank you for joining us here at cmsfx.com, and happy trading.